What it is.
Good day, good day, good day. Welcome back to RESWealthy Talk. I am Mercedes Erhahon.
That's me. Right. Let's go. I'm ready for another one.
Let's get it. So today we are going to be talking about first-time buyer meltdown. Let's walk through the chaos together. If you're having a meltdown right now in the process, it's normal, and we'll tell you why. Brian, what do you think the misconception is that buyers have typically when they get into the market?
Well, I think it has a lot to do with, some of these shows that are out there. You've got your, I'm not gonna call out anything. We know the shows.
I was gonna say, can we say names? We get sued.
No. However, a lot of these shows make it look too easy, and I think a lot of the conversation and it's like, oh, even the negotiations, the calls in between agents and say, hey, my client wants to come up another 100,000, 200,000. All right, I'll call you right back. And then it is very little of that. It's more obviously documentation, more paperwork. However, we do our best to negotiate. For us anyway, we negotiate before the offer is submitted. We negotiate during their deliberation. And if it's not where we want it to be, then we're coming back and countering as a result. There's a few more steps than what online makes it seem. And I think online, and I think also a lot of it comes from what a lot of these instantaneous online sites, the Redfins, the Zillows, where it's like click a button to see a house.
So you're telling me that real estate isn't you go on Zillow, you click, you find a house, somebody mysteriously shows up, and that's it. You own the home.
Right. It's we can't tell you how many times we've run into people and like, oh, this is how it's always been. We just click on the button on Redfin and somebody shows up, like a genie, and opens the door, and we saw it, and then we left, and that was it. We never talked to them again.
Never talked to them again.
And that's not the process. That's a process. That's a disjointed process. It's an order taker process, and we kind of highlighted this on a last episode or one of our episodes where we talked about you don't want just an order taker. You want a consultant, somebody who's going to help strategize with you, because otherwise you might be looking at more homes than you need to, or the wrong homes, or you're just literally out there window shopping, and you can window shop all day with those agents, right? If you're serious of actually finding a house and finding the right one for you and getting the best deal possible for yourself and the best financing terms, purchase terms, yeah, call us.
I mean, we just had this scenario with a couple friends of ours who, they overheard in a conversation that we were new friends, I'll say. We were in the real estate industry. They weren't aware. And so, I got the text like, hey, can you show us a couple houses this weekend? I said, sure. When are you available for a Zoom? So we can go over your wants and needs and make sure that we're on the same page so I can best assist you on your journey of home ownership. And the response back was just utter shock. Like, what is there to talk about? Like, I like this house. I know you're in real estate, so you can't show us. Mm-hmm. No? Mm-hmm. So we ended up doing a consultation of just tell me where you are. Why do you want to buy? What's motivating this? Tell me about areas that you're thinking. Are you paying cash? Are you financing? What's your time frame? Style on homes and things like that. And just when we started to have this conversation, they said they've never, ever, since they bought or sold in the past, have ever had a real estate agent do a consultation with them. They have purchased homes by clicking a button. The agent shows up. 9 times out of 10, that agent will show them the house, and then they'll end up going direct to the listing agent. And that's a whole nother conversation right there. And so it was almost, they were taken back by me wanting to give excellent service when that's not what they were used to or accustomed to.
Yeah, it's a very interesting thing, when we're coming across this, because it's, we operate off of standards to be able to meet expectations. And, I think a lot of the tone of our conversation so far have been, if you're not going to take this business seriously, agents, then get out the way. if you're not going to make sure that you're keeping the level of service and the way that we're running our industry professionally, get out the way, because the agents who aren't running. By the way, a it's a law.
It's a
Right?
law
It's a
now
law.
that
It's
you.
a expectation of our industry based off of a recollaboration of process
But
that says
what's the law?
you've got to have a buyer representation agreement in place to be able to see property. We can't show you legally. We can't show you property anymore without having a legal document, and that's where these internet companies burn me up. The Zillows and the Redfins, where they're literally just bypassing it and not having a process for that. And I don't know where they became the elephant in the room, where they don't have to abide by the standards
by the DOJ,
the DOJ and the Department of Real Estate across the
Right.
country of here's the norm, the standard practice of how we're taking care of our people. And the reason why we have this in place, the buyer representation agreement in place, is to protect the buyer, and also to protect our time as well, of who we should be investing in terms of resources.
You hit that right on the point, Brian. So if you're not signing a buyer representation agreement with a real estate agent that you're working with, they have no fiduciary duties to you. Meaning they're not out there to protect you. There's no, like, people think, oh, I don't want to be tied to a contract or tied to one person. My thought process is, why wouldn't you want somebody to be working for you to the best of their ability and having your fiduciary best interest at heart? Like,
Right.
I don't get it.
Right.
I don't get it.
Right. It doesn't make much sense to me. And however, that's just where we've been. Much like, you've got bad doctors, bad nurses, bad attorneys.
Yeah, all of them.
Bad attorneys. Bad attorneys. You have bad attorneys. You also have bad agents. And so there's, just like any profession. And I think we in recent months or years have caught a little bit of flack because for some reason we're getting thrown underneath the bus, and I know the reason, right? Because there's a good amount of not great agents out there.
You see,
Not great agents out there, and also bad attorneys. So you have those people who are kind of muddying up the water, right, for the pros in the business. And so to that we say, get out of the way.
Get out. Move.
Bad agents.
Get out. Okay.
And bad attorneys.
I could go on and
Bad
on
attorneys.
and on. So
There's bad attorneys out there.
I come get him. Prepping financially. I feel like that is where buyers have the most meltdown, is what they think versus reality. So example, one that pops in my head is, oh yeah, I've been following my credit on Credit Karma for years. I got an 800 credit score. Credit Karma, okay. Well, prior to,
FreeCreditReport.com.
prior to a lender running your credit, do me a favor and get your one free credit report through, Experian.com. Let me know what that looks like. And the amount of shock that people have. Why does Credit Karma say I have an 800 and Experian's over here saying I got a 650?
Right.
Where's the discrepancy?
Yeah,
So already there, that's when the initial shock and all comes. Or it's the opposite. I don't know. I don't think my credit's not that great. What are you using to check your credit? Oh yeah, Credit Karma says I'm at a 600.
Mm-hmm.
Pull up on Experian, boom, they're at a 750.
Mm-hmm.
Never would have thought.
Oh, for sure would have thought.
Never would have thought.
Well, the thing about that is, a lot of people don't know that there's different credit categories, right? So you've got, your credit cards run, certain credit guidelines off of their scores. So there's a credit card score, there's an auto loan score that's best for auto loans, there's a score that's best for mortgages. That's why when you go in and run your credit to buy a car, it's different when you run your credit for when you go buy a house, because there's different algorithms that they use to say, okay, this person will be proficient at repaying this loan back as far as an auto loan goes, versus, somebody buying a home, it's a bit more intensive. So, where I'm actually going through that right now with a client, we're working on doing a refinance for him, and then we're going to go and help him purchase an investment property with that refinance, and he had a situation that something popped up on the score that he didn't know wasn't there, didn't know it was there, and so he's paid it off, and so he's waiting for it to come up, and then so he'll send me the stuff that is coming directly from his Credit Karmas and whatnot, and when we do a soft credit pull for him, it's a different score, and the our score that we find is lower than what he's got on his app, and he's like, "What's the deal?" And so we're walking him through that process. However, that's some of the miscommunication. So the dialogue is anytime you can get in early and often to start the process with a professional, somebody who's going to walk you through. And again, for us, we like to give a game plan. We don't like to say, "Oh, you don't qualify today. All right, bye." Right? It's more of a, okay, well, here's where you're at. Here's what in order for you to get to this price, here's what you would need to do, and we do our best to create a game plan for you because it's a journey, and particularly, the first pre-approval may not always be the best, or may not always be the most exciting to you because you're like, "Well, I thought I would have been here." All right, well, that doesn't mean that you can't get there. Let's come up with a plan to get you there. So, the earlier you can bring a professional in, the better, because we damage ourselves by self underwriting and thinking that we're going to be able to do what the underwriters do, and it's not that way.
Or I feel the other misconception is I find the house that I love, then let's talk about finances. By the time you take the time to do your due diligence and get everything into a financial advisor, a lender, to make sure that you're financially qualified to purchase a home, that house is off the market already.
Right.
Do you know how many times people have been like, "Mercedes, I love this house. I want to go see it this weekend." Okay, we see it, and then what? Well, you're now working on how can I buy that house. The people that saw this same house this weekend are already writing offers because they were ready, willing, and able at that very moment. So even if your goal to purchase a home maybe 6 months from now, start now, because you do not know what may be on your credit report. You do not know if you filed your taxes properly. You don't know if you have cash, how to season it. So let's start the process now so that you are ready, willing, and able in 6 months. When that dream home does get sent to your email by me and you say, "Mercedes, this is the one." And I can say, "Guess what? We're ready," because you took the steps needed, credit, finances, whatever you needed to do to get in this position. Now it's go time. Now it is go time.
True. Okay.
So I think, Brian, another shock for buyers are in their mind, they may say, "Yeah, I think I want to buy a house that's 900 to $1 million. That seems good. That seems fitting." Well, you may qualify for that. However, your purchase power is determined by your comfortability on your mortgage payment. And that's when we've seen the shift with people on purchase price. Yeah, you can qualify for this, but are you comfortable with that mortgage payment? And those are the real conversations that need to be had. It's not always about the number. It is, what are you comfortable with paying monthly for your mortgage, insurance, everything that comes with that, possible, HOA. You being on the mortgage side, Brian, I'm sure you get that sticker shock sometimes from people being like, "Whoa, I didn't realize this payment would coincide with this purchase price," right?
Yeah, it happens a lot, and that goes back to the sooner that you can get into the conversation with a professional, the better. It for some reason the math is different when you do it online yourself versus when you actually talk to a professional. So, or don't self underwrite, right? Don't self medicate. Make sure that you're talking to a professional to make sure that you're good. That's most important.
Another one that comes up a lot still. We're almost in 2026. I cannot buy. I don't have 20% down. What do you do when you hear that?
It's just it's a myth, right? If we're going back to the show Mythbusters, it's a myth, right? And we continue to work to bust that myth because it's 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 holding a lot of folks back because they think they've got to have 20%. Now, here's the thing too. A lot of people may want to get that forever home for their first home, And because they're looking to do that forever home for their first home, and then they're thinking, oh, I need 20% for that. So like your forever home might be in a bracket, call it, a million or two, or a million, 1.2, and 20% down. Now you're talking about bringing in 240, down with 20% versus, let's just say you go with a starter home at 700, and because it's within the loan limits, you could probably do 3.5% down. Now you're talking, $25,000 down. You see the difference, $25,000 down versus 240, 250, and then those two numbers are before closing costs. However, it's just a different approach, different process, a different mindset for those two different purchases, because obviously that $1 million home that you're going to buy, higher taxes, higher maintenance, right, bigger property to clean and keep up. There's all these things that come with it that are going to just be more cost expensive wise, that you may say, you know what, let me just go ahead. Why not? What's wrong with practicing on a starter home? What's wrong with practicing on, condo, townhome, or a small single family? By the way, most people don't consider or think about if you want to organically become an investor, right? You've got to think about the long term versus the short term, because if you're saying, okay, I want to have multiple homes one day, if you start out with your big home first, that means for every property after that, you're going to have to justify to an underwriter, which you're most likely not going to be able to do, on why, if you ever wanted to do less down, why that would be possible for you. And most underwriters are going to say, no, it's 20% or more, 25%.
Yeah,
right.
Then it's automatic.
Right, it's automatically investment property. Or you could say, okay, well, let me start with a small condo.
Get my start to forever home.
Right, so I'm going to start with a small condo. I can 3.5% down that. And then once I'm in it for a year minimum, then once we're growing, we can create a letter of explanation for you that just says, is this next property that you're buying get with another 3.5 or 5% down loan, or 10%, whatever you want. Is that the logical next step? Meaning, we can go to an underwriter and say, all right, they're going from this 1,200 square foot place to this 1,800 square foot place. Maybe it was a condo townhome, and then maybe you went and bought a duplex, right? All right, this has a little bit more room. It's got a backyard. There's no HOA. All right, an underwriter can say, okay, we can see that. That makes sense. All right, and then from there you go. So you went from a condo to a duplex, and then now you're like, all right, well, I'm ready for a single family. You can also do another 3.5% after a year, or 5% down, whatever is comfortable for you and whatever the underwriter is looking for. You can do another 3 to 5% down loan. So you can use the primary residence loans that are lower down payment to move into the next place, versus saying, okay, I've got my huge home, and then now I want to invest. You're not going to be like, it's mortgage fraud for you to say, okay, I have my big old house, but then I also want to buy this condo for an investment, but I have to finagle how I got to finance for that, because otherwise it's 20% down. If you're buying in the same city, same town, same overall area, you're not going to be able to justify that to an underwriter. Say, why would you go from this 2,000 square foot or 2,500 square foot place to this 1,200 square foot place that's in the same city or down the street? Why would that
make it make sense?
Yeah. So,
and this is why you want
to stair step.
Yeah.
Stair stepping. Start with your townhome condo, then go from that to a multifamily or duplex or whatever, and then from there you can go to your starter single family with your family, right? And then you can justify saying, okay, each one allows you to do the 3 to 5% down. That's how we wrote this course in RESWealthy University called House Hacking to Wealth. We break all this down, making sure that people know that there's steps to becoming an organic investor versus just pushing the game. Now, if you got 20% all day, all right, it's not a big deal.
Yeah.
Right. But if you're like wanting to make sure that you're doing this in a logical and step-by-step manner, and make sure that you know what's coming next, then all right, and you want to manage your dollars, then do it the way that professionals study.
Point blank, period. And I think you keep hitting it on the professionals. How many real estate agents would have run to the opportunity for someone who's like, no, I want to go buy this big house right now, 20% down, not have a conversation of what are your long-term goals?
Sure.
Do you want to own multiple properties? How many of our clients have we helped with this conversation of, hey, let's get the start to Forever Home. That way you can get your foot into the door of building generational wealth through real estate.
No doubt.
And own multiple properties right now, and able to leverage those current properties to help other family members buy.
No doubt.
I mean, that's why you have Brian and Mercedes Erhahon here. Now, as we're talking about meltdowns and things with buyers, one of the major ones is while they're in the process of buying, they go do what? That changes their debt to income.
Go buy something that they shouldn't be buying, cars.
Number one is
cars, furniture, or whatever it might be.
Ooh,
just wait.
I got a furniture story. Almost down to closing with this client. And in our consultations, always, this is one of the main things we're talking about outside of the other topics is do not buy anything. I mean it. Like, we understand emergencies happen. If there's something, that comes up in your life, have a conversation with your mortgage professional. However, please don't go buy cars. Don't go buy that refrigerator that's on sale. Furniture, any of it. Don't go co-signing for anyone. It changes the dynamics of your approval. So, had a client, I think we were about 2 weeks out from closing. Everything was going smoothly. And she was prepping to furnish the property. Went out to a furniture store. The furniture company told her, oh, this won't show up on your credit for 60 days. So you're good, right? The lenders and the underwriters, they do what? Another pool.
Do a credit pull right before closing.
Right before closing. Make sure nothing's changed. Well, that $5,000 furniture purchase showed up on her credit. That $5,000 furniture purchase cost her an additional $20,000 to be able to close on her house. Why? Because that furniture purchase and the payment for that furniture changed her debt to income. Mm-hmm. So when we say, we're not just saying this to be saying it, we are very serious on don't do anything that will interrupt the process of buying a home. Literally, when the deed records and you get your keys, feel free to go run out and buy a car, furnish your house. Don't do this last minute, 2 weeks before thinking it's not going to get caught. 9 times out of 10, it will, and it's going to cost you more.
Yeah.
Brian, so buyers going direct to new construction, we get a lot of horror stories about that. What do you advise the buyers out here that are interested in new construction?
Get representation, right? And so when you have representation, you have somebody looking out for you. Obviously, the builder has representation. That's the on-site agent. That's the on-site person there that's selling you on why you should be working with them and selling you on why you are going to buy this place and the upgrades, finishes, etc. And for us, it really didn't cost you in most cases right now anything to have your own personal representation when it comes to new construction. You can have your protection, your support. You can have your second pair of eyes looking over everything, because those new construction contracts are actually more beastly than our regular
I think our
CAR forms, California Association of Realtors.
I want to say our forms are 22 pages.
For the purchase agreement, I mean, you have some builders that are like 80-page documents.
I had one not too long ago that was 180.
So you got to make sure you go through all that and be aware of what to look out for. And we're aware of certain clauses. We're aware of certain process that they go through that we can keep them honest on. So all that to say is just get representation when you're going to new construction. And by the way, there's some really good deals right now with new construction that one can go for, jump on. Now, it depends on the season, depends on the timing, depends on the location, depends on the builder. And that's why you talk to a professional and figure out how to point that out for you, because we have our resources and relationships of what builders are building what and for what incentive to you. And so you never know. We got somebody into a new construction not too long ago, and at the end of the day, when we looked at it, total credits were close to like 40K. And, this is just only not only, but it was like about a 650 purchase, but like total credit. When you look at the interest rate buy down, I mean, at the time rates were, high sixes. She ends up getting a 4.99 rate for 30 years. And also another $12,000 in closing costs to close. So when you look at all the numbers and math to get to that point, it was almost 40K in incentives the builder was willing to contribute to one home. Now, the only way that they can do that is in certain cases they own the mortgage or have a relationship with the mortgage partners. In a lot of cases, they go out and direct to these mortgage bankers or brokers and buy rates in bulk. And so, if they're building 500 homes, they can afford to go to the bank and say, "Hey, look, I want to set up a deal. If I send people to you, how can we make sure that we're passing on some savings to these folks?" So now, I mean, me being in the mortgage business, I also know that it's important not to stand in the way of anybody's success, right? So we'll always kind of guide you through that. We'll keep them honest when they know that you already have a pre-approval with someone else like us. Then that's a way for us to keep them honest in the financing process. However, they don't need to know that our full intention is for them to go directly with you. I'm sorry, for you to go directly with them as far as purchase. But it's the way that we kind of keep an ace in the back pocket to know that we've already gone through that process. And hey, if you don't act right, we'll go in this other direction. And that's how they'll start to roll out as many of those incentives as possible for you. And so I know you've got a lot of stories about how you've helped people with these incentives, but I would just say in new construction, in some cases are cheaper than what you're buying resale
It needs
with
to be
more incentives.
It needs to be done right and with the right person.
Yeah.
And so, as Brian was mentioning, a lot of the new construction incentives are tied to the mortgage company. You have to use our mortgage company in order to get XYZ. However, there has been instances where they could not pre-approve our clients, and we had a backup plan. However, I was able to negotiate for those incentives to be used with their own preferred mortgage broker. Hey, if you can't get it done and we have someone else that can, why can my client still benefit from your closing costs? So I've definitely negotiated that. We've negotiated solar panels to be paid in full. We've negotiated appliance packages. And the most recent one for me, a client of ours, she was buying all cash. And so as we just mentioned, the incentives are tied to their financing. She walks in, we do the registration, and I asked, so, what incentives are you having right now? This is what I found online. I want to confirm and make sure that, she doesn't qualify for that. I said, tell me more. Well, she's buying cash. I said, she could close in 2 weeks.
Do tell.
She could close in 2 weeks. So tell me how she can't qualify.
Is my money not good here?
Right. And she's sitting there looking at me. It's her first time buying, right? And so I said, tell me more. Tell me why she cannot qualify for the incentives if she's paying cash and can close in 2 weeks.
Money is green.
I think that the builder would want to get this property sold within a few weeks. And so he said, let me call my higher ups. I said, I'll wait.
There's another builder down the street.
I said that too. I said, time is money. And, she's ready to go. And so I don't know, even if he actually called or fake called, however, he came back. She got the closing costs. Not only did she get the closing costs, however, we were also able to get her all her appliances taken care of at no money out of pocket. So she bought cash, got her solar, got her closing costs, and her appliance package at no money out of pocket. And the one thing she said to me when we left, well, first of all, she said, girl, I know you know what you're doing. Part one. Part two, she said, gosh, had I gone in here by myself without you, I wouldn't have known to ask for any of this.
That's the case a lot.
That's a lot.
A lot of the time, that's the case.
I see online all the time. People so upset. I got scammed out of a new construction. They told me they were going to give me this and they didn't. And, when I'm in these Facebook groups, my first question to them is always, did you have your own representation? Well, why do I need to? The builder, because the agents work for the builder. They do not work for you. I'm not saying all of them are scammy because I have some amazing colleagues in the new construction side of the business. And yet a lot of them, they're just turn and burn. They do what the builder says. So if you have a third party who's neutral there, that says, hey, when we sat down and signed this or talked about this, you said that they were going to get a 4.99. How come I don't see this in the contract? Contract still says 5.99%. Oh, I'm sorry. Let me redo the contract.
Food sent back.
I am such a food sender back, but that's here nor there. So, Brian, at the end of the day, tell the buyers what the real roadmap is to buying a home from start to finish, real quick, like rapid fire. Like first consultation, right?
Yeah, well, so it's get your team in order, right? So get your team. That's going to consist of your mortgage broker. Is going to consist of your agents. Going to consist of like obviously the people that your agent know. Having a good team can also lead to other good team members when you need it. A good contractor, a good home inspector, a good appraiser. You name it. And so that's going to be the start of the experience. And so a lot of us, a lot of folks I see get burnt out from not having the right people in the very beginning, and they're working harder than they need to. So number one, get your team in order. After that, once you know you're through your consultations for the real estate, the purchase, the consultations for the financing, and also just knowing exactly where your numbers are at and what you can get for that property. Obviously, go out there, you check out property, you go see them. And typically, we won't go show you 10 homes in a day. We won't go show you 8. Typically the sweet spot's about 4. And it'll be about 2 to 3 times per showing. Now, by the way, Mercedes does a really good job of really going through a bunch of your needs and wants and priorities about what you're looking for and why you're looking for it.
This is why consultations are important.
It's just not about, hey, I want a kitchen for a kitchen's sake. It's okay, well, do you entertain, or are you not a big cook? Do you want most of that square footage in the living room versus the kitchen? Do you want an open floor plan? Do you entertain all the time? Or do you want, more of a backyard, less home? Or do you want less backyard, more home, bigger bedroom? Do you need a bathroom and bedroom downstairs? Those are the little things that we need to know. So that way, when we start selling new property, we're selling new property in what we call concierge mode, where you're only going to be selling properties seeing properties that, we've already discussed and meet your criteria. If you say, hey, I don't want to see any home like this in this area or this age, then you won't get them. And so I hear a lot of stories where people just get, put on automated searches and they're just getting all this stuff that they don't want.
And they get frustrated and they don't know how to tell that agent.
Absolutely. And so that's something that we really, we know that when we do that upfront work for you, then we don't have to go see 50 homes. We don't have to go see 30 homes. We don't have to go see 20 because we've cut a lot of that noise out and a lot of those distractions out and a lot of those properties that don't fit out. And now we're only focusing on stuff that hits for you. And then after that, obviously it gets into offer writing and negotiations. Now, by the way, communication is key. So communication before the offer written. A lot of agents will just write an offer without even communicating with what's going on the other side. They don't know what's important to the seller, all those things. And, you're kind of shooting in the offer blind. And that's not where great negotiations happen. You've got to have somebody who's willing to go in and interrogate the other side and figure out what's hot and what's not, and then put that on the offer and, give you a better chance to succeed in the home that you're looking for. So, and then after that, we go into escrow, and then escrow, that's when the shot clock begins, and we really start to, under timeline. And that's another thing why you want to have great teams, because when you're under duress, under time constrictions or constraints, you've got to make sure that you're performing when it's most needed. And so, when you're performing under these guidelines and timelines, you never want to have a situation where you got to make a tough decision and you don't have all the information. Mm-hmm. You don't want to be in a situation where you make a tough decision and you don't have, all the confidence that, all right, we're going to go forward, we're moving forward, or we're not. So, when you do the homework up front, then it's an easier process on the back end.
For sure. Thank you for that. So with that being said, it's normal to feel nervous in this process, for sure. The meltdowns are real. I get the freak out calls, the freak out text. It is all normal to feel these emotions. So you're not alone. You're not alone at all. It is going to be probably one of the biggest purchases of your life. However, you're not doing it alone. You have us. So for that, we are grateful for you all tuning in to RESWealthy Talk.
Let's go. Let's get it. And always, if you ever want to get more information about the process, one thing that we did that we're proud of is, putting together these courses that we're highlighting here and there
Yep.
throughout the conversation. So for you or anyone that you know that could use some information and want access and not, a gatekeeper, or the process in general, the process is kind of set up as a gatekeeper, meaning that, you've got to go through all these different sources to get what you're looking for. Our goal is we put it all in one spot. So particularly if you're purchasing in California, specifically Southern California, to buy, sell, invest, whatever, refinance, we've got the process nailed down for you. So that way you don't have to be spending all this time looking at, where's this, where's that, what does this mean? Yeah, we've got a platform that you can just tap into and get that information on the go, on demand, and share with your loved ones. So with that being said, check out RESWealthy.com for more info on that and getting access. Otherwise, it's been what does Les Brown say? A pleasing pleasure to have you with us today.
Oh
And looking forward to the next opportunity for us to be together and talk more shop and keeping it real with everything that we come across.
real.
It's calling it a day now. See ya.
Bye.